joining us right now for some insights on some of the stocks reporting this morning or last night. And where she sees value right now is Stephanie Link. She's the chief investment strategist and portfolio manager at Hightower Advisors. She's also a CNBC contributor. Stephanie, let's start with the Pepsi numbers that just came out. I know you were watching these pretty closely. You wanted to look at organic growth. What do you think?
Well, I mean, a miss is a miss, right? Restructuring is also not great. I'm focused on the U.S. Frito-Lay North America. That's going to be the most important for volumes. Volumes were expected to be down 3.5%. I haven't seen the volume numbers yet, Becky, but you look at the stock and it has underperformed. It's down about 17% in the past year. Trades at 17 times, which is definitely at the low end. But I just wonder, what are you paying for with an earnings miss and volumes that are in decline? And obviously having issues with tariffs. So I think this is a no touch, at least for now. I am tempted given the multiple, but I have to see where the numbers are going to settle out.
The GLP-1s, how big of an issue is that versus tariffs for you?
Oh, I think they're both really big. The GLP-1s are actually probably bigger than tariffs because I think tariffs are going to be, it could be some more of a kind of a one-time nature in terms of how we readjust the numbers. But GLP-1s, Becky, I think you're in the second inning. And look at what Lilly came up with last week in terms of the pill version of their weight loss drug. So I think that they have a lot of headwinds, the overall consumer packaging companies in general.
We got some earnings last night and obviously we're watching these earnings so closely to see what people are saying about the economy, what they're saying about tariffs, what they're saying about what they're hearing from their customers. IBM said that its customers haven't been pulling back yet, but they did warn about Doge and the wait and see mindset that you're getting because of some of these tariff constructions. That stock is off by 7.6% this morning.
Yeah, so earnings season, I've said is silly season, the way the companies and stocks react. I think this is a silly reaction, to be honest with you. This company did report a solid number, and actually the consulting business was better than expected. So was infrastructure. The reason the stock is down is because software came in at 9%, which was a deceleration from the 11% growth last quarter. The company does expect to see a reacceleration next quarter in software, but the whole reason we own IBM is because it's kind of a safe haven, right? They only import about 3% of their goods, so they don't see a big tariff impact. That all being said, the stock has been really a stellar performer relative. It's up 10% before today, up 10% year to date, when you had semiconductors and software stocks in general down 18%. So I think it's just giving back some of the gains, but I do think it's an opportunity because I do think that the company is doing all the right things in terms of focusing on growth in software, and I do think you will see a reacceleration to doing a lot of M&A. They did $1 billion more in AI this quarter. Now they're up to $6 billion. Their free cash flow at $13.5 billion was reiterated for the full year. So I think this is one on a pullback you definitely want to be buying.
What about Chipotle? IBM says that its customers aren't pulling back yet. Chipotle says its customers are, and it's lowering its sales growth forecast as a result. That stock's off by about 3.4% this morning.
Yeah, Becky, it wasn't good. It really wasn't. I try to find something good in every quarter, but I think they are having a struggle. I don't think it's Chipotle specific. I do think they are continuing to gain market share, but the same store sales, negative 0.4, we were all bracing for like 1. But a couple of quarters ago, they were growing mid-single digits. So you can see massive deceleration. And so they are going to have to increase their advertising spend and figuring out more product introductions. Throughput is their sweet spot. I think they can definitely see margin improvements because of throughput. But I just think you're not seeing the traffic at this point in time. And I think it's just going to be a wait and see, unfortunately.